MCQs for capital structure, also called capital structure theory. Yes. First one, it refers to mix of sources from where the long-term funds required in the business may be raised. A, cost of capital. B, capital structure. C, optimum capital. And D, all of the above. So capital structure represents what? Which source of fund is preferable? Okay. Second one, capital structure refers to proportion of debt, preference share capital, and equity share capital. This statement is correct. This statement is incorrect. This statement is correct. Then, fundamental principle governing capital structures include cost principle and risk principle, control principle and flexibility principle, other consideration, all of the above. Totally, how many principles are there? 5 principles. What are they? Cost principle, risk principle, control principle, other. Hold on. Cost, risk, control, flexibility, and other concepts. Okay. Next. Management chooses such a combination of source of fund. Which fund is easier to adjust according to changes in need of fund in future too is known as cost, risk, flexibility, and control. It should be flexible. Therefore, flexibility. Flexible. An ideal pattern of capital structure is one that maximum EPS is cost principle, risk, flexibility, and control. An answer comes under one, cost principle. Cost low, that is preferably that capital structure is that will help to maximize the earning per share. Then, use of more and more debt fund means higher commitment in the form of interest payout. It comes under cost, risk, flexibility, and control. It leads to risk. The debt content should not exceed the maximum which the company can bear is known as conservation, solvency, control, profitability. What is that called? It comes under which one? Appropriate capital structure. How many types of appropriate capital structures are there? 5. What are all they? Profitability, flexibility, conservation, solvency, control. 5 features. So, in which circumstance they are talking about debt content should not exceed the maximum one company can bear. Or referral or broken. That comes under conservation. Conservatism, particularly, conservation. How much you can bear, that only you have to take. Understood? Next, the types of capital structure theory includes net income approach, net operating income approach, approach, all of the above. So, how many types of capital structure theories are there? So, we have to give the word. With reference to the theory, you have to learn. Not mere learning MCQ alone is not sufficient. But capital structure theory, theory appropriate capital structure, what are all the features of appropriate capital structure? Principles of capital structure, control, what are all the principles are there? With reference to theory, you have to learn. Then only you can have the grip. Now, types of capital structure theory, how many types are there? 6. First slide doesn't know, but 6 types. What are they? Net income approach, net operating income approach, modic approach, traditional approach, trade-off, Trade-off theory and pecking order. Very good one. Next, capital structure may consist of relevant theory, irrelevant theory, both A and B, none of the above. Both A and B. Based on capital structure theory, the company may have equity fund alone, debt fund and equity fund, debt, equity and preference share fund. All of you? Assumptions under capital structure. No. 7 no's பார்த்தா என்ன no's பார்த்தா அப்ப no preference share அப்ப என்ன வரும்? Okay, debt fund and equity fund. Next, which of the following is not an assumption under capital structure theory? No change in capital employed. All earnings are distributed to equity shareholders. No loss for the company. None of the above. Not, because everything form part of one assumptions only. How many assumptions are there? 7 assumptions. What are the 7 assumptions? First one, no preference share capital, no change in capital employed, no retain earning, no loss assumption, no tax assumption, no change in investors' expectation, no change in fixed operating cost. Okay, good. Value of the firm is not equal to market value of equity and market value of debt. Is it called value of the firm or not? Debt and equity value of firm. Therefore, that's correct. But they are asking not. EBIT divided by KO is equal to value of firm only. Earnings available to equity shareholder by KE is equal to value of KE, not value of firm. Correct or not? Therefore, answer C is not correct. Got it or not?
Yes, sir.
Next. Market value of equity is equal to EAT divided by KE, earnings available to equity share divided by KE, EBIT divided by KE. Value of equity, earnings available to equity shareholder divided by KE. B option. Are you with me? If there is no preference share, then EAT divided by KE. Appo original formula enna? Earnings available to equity shareholder divided by KE only, market value of equity. Next, model approach consists of without tax, with tax, all of the above, none of the above. All of the above. For one time person உள்ள திருப்பி இருக்கு பார் தியரி அத கொஞ்சம் பொறுமையா தியரி ஒட்டே படிச்சு பார்ப்போம். Another 2 more time படிச்சிட்டேன்னா you can expert, you can deliver all the points in exam also. Understood? Approach without tax approach. A, value of the levered firm is equal to value of the unlevered firm. Right? Yes. Because unlevered, no tax assumption. Value of the levered firm is equal to value of the unlevered firm plus a tax benefit, AOA, NOA. Without tax assumption, therefore A is correct. It's not with the tax, without tax assumption. Are you with me? Therefore, option A is. If there is no tax, there is no tax benefit. If there is no tax benefit, levered or unlevered, both are same only. That is logic or not? Good. Good. Assumptions under MM approach includes KD is greater than KE. Right? Nice response. Cost of debt is greater than cost of equity. Right? No. KD remain constant to various level of debt equity mix. Is it right?
Yes, sir.
Sure.
Yes, sir.
KO is constant and not affected by leverage. Right or not? AOA. Correct. What is the answer? First one right or Liam? Second one, B is correct or not? Remain constant. C is correct or not? KO, overall cost of capital, constant and not affected by leverage. Is it right or not? As per MM approach. Correct இல்லையா? Hello? Correct only. Check பண்ணு பாரு, எடுத்து பாரு, எல்லா மாதிரி book பாரு. Correct. So the first option, KD less than K in மாத்திக்கோ. So that option, all of the above is the correct answer. Correct? Simple model. KD less than KE. Is it correct or not? Correct. KD remain constant various level. Correct or not? That is also correct. KO constant, not affected by leverage. That is also correct. Therefore, AO is all of the above. Is correct. So totally how many assumptions are there under MM approach? எல்லா assumption படிச்சாதான் புரியும். Okay? Are you comfortable? Assumptions in MM approach is very frequently asked question. In MM approach, with the tax model, value of the levered form is A, value of the unlevered form plus tax benefit, value of the levered form, value of the unlevered form, AOA, NOA. What is the answer? Value of the unlevered form plus tax benefit. Now Amruda's answer, now only correct. Got it? Next. Which of the following statement is incorrect based on MM approach? Incorrect. Okay. Capital markets are not perfect. Right. Perfect தான் correct. A is not correct. இல்லையா ஆன்சர் வந்துருச்சு. B check பண்ணுவோம். Company can group it into equivalent risk class on the basis of their business risk. Right or not? Refer MM approach. Book எடுத்து பாரு, pick up பாரு. Right. No transaction cost. Right or not? Correct. KO is not affected by leverage. The which one is not correct. A is incorrect. Understood? Next. Clear out? Incorrect. First is not correct, no. Capital markets are perfect, but not perfect. Correct or not? Therefore, incorrect only. Understood, Raja? Good. Arbitrage represent A, buying security at lower price in the one market and selling it in higher market. As a result of arbitrage, equilibrium is attained in different markets. It is a riskless profit, AOA. AOA is the correct answer. Understood what is called arbitrage? Yesterday also I sent one video for your reference. What? I want to topic, Raja's topic. Correct? For fighting, படிச்சீங்களா? Studied? பத்திரம் மாட்டேன். Very good. Arbitrage. Arbitrage हमसे ले video. So arbitrage very easy रहेगा. Normal English one. With respect to arbitrage, from Chennai to Coimbatore, I am coming for taking class. Assume here, any product cheaper product in the which one is cheaper? Suppose chips is cheaper. A1 chips chips cheaper. When compared to Chennai, I'm telling. Okay, Chennai costly is cheaper. I may buy the product while going to Chennai. I may going to sell the product. Chance recall. So that process is called what? Arbitrage. Upper where I am getting cheaper, again wangi high price utruvan. In that circumstance, both are equal. Their price also where the demand is more, demand supply relationship only. Clear? Appo more and more buy பண்றேன். அப்ப நிறைய demand இங்க வந்திருக்கு கோயம்புத்தூர்ல. Price ஏத்திடுவோம். அங்க more and more product chips available, then they force reduce the understand logic or not. அப்ப one particular point of time என்ன ஆயிடும்? Equal ஆயிடும். So that is called arbitrage. எங்க ரேட் குறைச்சலா இருக்கு, எங்க ஹையா இருக்கு, அங்கே இருந்து ட்ரான்ஸ்ஃபர் பண்ணி விட்டுறோம். Normal businessman's logic one. பல homemakers, they'll buy the sarees and what? Sell the sarees in retail. Clear? So by way of that, they want to end the profit. So that overall, இது மாதிரி பெரிய அளவு மார்க்கெட்ல பண்ற போது overall price will what equilibrium ஆயிடும், same ஆயிடும். Understood? Next. So arbitrage, I will send the what video also, kindly refer and refer our LMR book theory கொடுத்து படிங்க. Next question. Daily videos useful இருக்கா? படிக்கிறீங்களா? சாய்ஸ்ல விட்டுறீங்களா? And MCQs also daily I'm posting. அதுவும் பார்ப்போம். Okay? ஒரு காஸ்டிங் ஒரு FM அந்த மாதிரி MCQ போட்டுட்டு. Next, arbitrage processes A. Investor of the firm whose value is higher will sell their shares. B. Investor of the firm whose value is lower will sell their share. Any one of the above, all of the above. What is the correct answer? A. Investor of the firm whose value higher will sell the share. Gold வாங்கி வச்சிருக்க ஷேர் மாதிரி gold rate increase ஆகுது விற்கணும் திரும்ப வாங்குவியா better we can sell so that you can already purchase gold is there. I may sell so that I can get some profit. Okay. Next question. Which of the following statement is incorrect with respect to arbitrage process? Arbitrage is happening because of imperfect information. Incorrect. Second one, arbitrage is riskless profit. See, due to modern technology development, arbitrage opportunities will reduce. None of the above. Answer is one. None of the above. Because all the statements are correct one. So arbitrage process and the arbitrage is happening because of imperfect information. Chennai people may not know chip rate, chip size உள்ளதா இருக்குன்னு தெரியல. அதனால தான் விற்க முடியுது. Clear? Imperfect information இருக்கும்போது okay. Next, arbitrage is riskless profit. Am I right or not? பெரிய risk கிடையாது எனக்கு. Then due to modern technology development, arbitrage process will reduce. No. Again, more and more business will develop on. Are you able to follow? Clear? By way of அப்புறம் தெரியுது which area cheaper price இருக்கு. Okay, ஜெய்ப்பூர்ல போய் வாங்கிட்டு வரலாம். Or தமிழ்நாட்டுல விற்கலாம். We may have some water. Technology is money, we can develop the business. Understand logic or not? Therefore, none of the all these statements are correct. Risk associated with the firm's operation are known as business risk, finance risk, market risk, none of the above. Increase. Modern technology not affect ஆகாது. Yes. சொல்லுப்பா. That's not correct. இல்லையா? ரெஃபர் புக் எடுத்து பாரு. என்ன சொல்லிருக்கேன் பாரு. LMR புக் எடுத்து பாரு. என்னது? Understand? So that is statement is correct or not then? Okay. Next, business develop பண்ணலாம், but everyone aware of the knowledge of the water. Where is cheaper? இப்ப Chennai people may not aware in Coimbatore chips is cheaper. Then I can be in the position to go and sell the product. எல்லாம் ஆன்லைன்ல வந்துருது. If you book அப்ப 50 rupees chip, I can't put 60 or 80. இப்போ ஆன்லைன்ல பர்ச்சேஸ் பண்ணனும் சொல்றோம் இல்லையா? Therefore the process will get affected. Understand logic or not? அப்ப என்னோட opportunity of selling the product will come down. Clear? Are you able to follow? Good. So due to modern technology development, arbitrage process will reduce. Yes. Good. Next problem. Risk associated with the firm's என்னப்பா? Operation is known as business. Okay. Next, it refers to additional risk placed on the shareholders as a result of debt fund. That is called finance risk. So two types of risk are there. Business risk. By way of my operation, I may have the chance to incur the loss. That's a business risk. Business loss or not. Then business may going to earn profit, but more and more debt fund because of that loan fund, I have to pay interest. Because of more and more interest, my profit is coming down or loss I'm incurring. Then financial performance is not good. That's called operation is good, but financial performance is not good. Then it become finance risk. Are you able to follow? Next, which of the following statement is correct with respect to business risk? A, it is the uncertainty about the future operating income. Right? B, it is how well can the operating income can be predicted? C, it can be measured by standard deviation of basic earning ratio. All of the above. Everything is for business risk. Good. Financial risk may be risk of cash insolvency, risk of variation in EPS, all of the above, none of the above. So two types of finance risk are there. What are they? Cash insolvency or so C is the correct answer. Which of the following statement is correct? Companies having more debt fund would have higher finance risk. Financial risk can be measured by financial leverage multiplier. For fully equity based companies, financial risk is high. All of the above. Which one is incorrect? They are asking, right? Which one is incorrect? C is incorrect. Why? Financial risk for the fully equity firm is nil. Why? There is no interest commitment. Right? Good. Which of the following statement is form part of business risk? Cash insolvency, variation in EPS, all of the above, none of the above. None of the above. Why? That comes under financial risk, not business risk. The all of the above exam careful. Next, situation where a firm has more capital than its need is known as Nariya capital. Therefore, one over capitalization. Good one. Good. Next, which of the following is form part of overcapitalization? A, raising more money through shares and debentures than company can employ profitability. B, borrowing huge amount at a higher rate than the rate at which the company can earn. C, excessive payment for the acquisition of fictitious assets. D, all of the above. All the above is for reason for overcapitalization. Good. Which of the following is not the consequence of overcapitalization? Not the consequence. Considerable reduction in rate of dividend. Right? Yes. Increase in market price of the share? No. Will it increase the market price or decrease the market price? Therefore, that is not correct. Right? Not correct only they are asking. Right or not? Yes, sir. Next, leads to window dressing. Yes. Therefore, B is the correct answer. Remedies for overcapitalization includes company should go for reorganization, right? Buyback of shares, right? Reduction in claim of debenture holders, right? All of the above. Very good. The idea of the company choose how much debt fund and how much equity fund to use by balancing cost and benefit is known as cost of capital, capital structure, trade-off theory, none of the above. What is that called? Trade-off theory. Why trade-off theory? Debt and equity alone means trade-off theory. Clear? Return earning, debt, thereafter equity means pecking order. Got the idea or not? Good. Brilliant, I think. Direct and exam. Next, trade-off theory of capital structure deals with the concept of cost of financial distress, agency cost, both A and B, none of the above. What is the answer? Both A and B. Next, order of preference of fund. Preference fund is in case of pecking order theory. In the order preference with respect to fund. Internal. A is the correct. First, internal fund, nothing but retain any. Next, debt fund. Last one only equity. So option A is the correct. Padikkamla answer சொல்றீங்களே படிச்சதால தான் answer சொல்றீங்க இல்லையா? Next, Based on pecking order theory, this theory states that firms prefer to issue debt when they are positive about future earnings. Right. Equity is issued when they are doubtful and internal finance is insufficient. Right or not? So both are correct. Statement 1 and 2 is the correct. Right. Good. Good. Next. In general, EPS is a criteria for selection of capital structure. But if the number of equity shares are not available, then we have to select capital structure by way of return on equity. Very good. The assumptions under hypothesis of capital structure do not include following. Capital market are perfect. B. Investor has homogeneous expectation. C. All firm can be classified into homogeneous risk class. D. The dividend payout ratio is 10%. That is, and there is no corporate tax. The answer is hypothesis not include. Capital markets are perfect. Which of the following is irrelevant for optimum capital structure? With respect to optimum capital structure, what are the features of optimum capital structure? Profitability, flexibility, but liquidity is not there, right or not? So liquidity is irrelevant for optimum capital structure. Financial statement refers to all financial sources, short term, long term, none of the above. What's that? All financials. EBIT, EPS, indifference analysis chart is used for EBIT, EPS, indifference analysis chart is used for evaluating the effects of business risk on EPS, examining EPS results, determining the impact of changes in sale of EBIT, showing the changes in EPS quality over the time. The answer is, this is for the purpose of examining earning per share research. EPS should remain same irrespective of the EBIT. Okay. The term capital structure means long-term debt, preferred stock, and equity shares, current asset, current liability, net working capital, shareholders' equity. What the answer? Easy question. Combination of all capital. Long-term debt, preferred stock, and equity shares. The cost of monitoring management is considered to be a bankruptcy cost, transaction cost, agency cost, institutional cost. Monitoring management. In basic aspects, monitoring the management. Agency cost. Management is working properly or not. Company is different, management is different. Agency cost. The traditional approach towards the valuation of firm assumes that the overall capitalization rate change in financial leverage. B. That there is an optimum capital structure. C. That the total risk is not changed with the changes in capital structure. And D. That the markets are perfect. Based on traditional approach. Which assumption? Answer is B. Optimum capital structure. Next, market value are often used in computing the weighted average cost of capital because this is a simplest way to do the do the circulation. B, this is another constant with the goals of maximum shareholders value. C, this is the required by SEBI and this is a common mistake. What is the answer? Answer is B. This is it is for the purpose of maximization of shareholders. Next, a firm's optimum capital structure A is the debt equity ratio that result in the minimum possible weighted average cost of capital. B, 40% debt, 60% equity. C, when the equity debt ratio is 0.5. And D, when the cost of equity is minimum. What is the answer? Answer is A. The debt equity ratio result in minimum possible weighted average. Overall cost of capital minimum. For that purpose only optimum capital structure. Overall cost should be minimum, no? Not only equity alone. Hello? Yes, sir. Yeah, simple question answer. Next, capital structure of the firm influences the risk, return, both risk and return but not risk. Both risk and return. Considering the below mentioned statement, A, first one, a company is considered to be overcapitalized when its actual capitalization is lower than the proper capitalization as warranted by the earning capacity. That's the correct one. Both overcapitalization and undercapitalizations are detrimental to the interest of the society. Both are correct, both are not correct. What is correct, what is not correct? Shall I read one more time? A company is considered to be overcapitalized when the actual capital is lower than. Is it correct? Actual capital more or the overcapitalization, right? Therefore, first one is not correct. Second one, overcapitalization, undercapitalization is detrimental, right or not? Proper, appropriate. Therefore, what is the correct answer? False and true is the B is the correct answer. Are you able to follow? Next. Next question. A critical assumption of NOA, net operating income approach to valuation is A, that debt and equity level remain unchanged. B, that the dividend increases at a consistent rate. C, that KE remain constant regardless of changes in leverage. D, that the interest expenses and the tax are included in the calculation. What is the right answer? C is the correct. That the KE remain constant regardless of leverage. Changes in leverage. Next, which of the following steps may be adopted to avoid the negative consequence of overcapitalization? To avoid negative consequence, okay? A, the shares of the company should be split up. This will reduce dividend per share through EPS shall remain unchanged. Though EPS shall be unchanged. B, issue of bonus shares. C, revise upward the par value of shares in exchange of the existing shares held by them. D, reduction in claim of debenture holders and creditors. For the answer, reduction in, yes, D is the correct answer. If the company is having debt equity ratio 70-30, listen, if the company is having debt equity ratio of 70:30, then the company is considered as levered firm, unlevered firm, high cost firm, none of the above. Levered firm. Once debt fund is there, then firm is called, the company is called one? Levered. Comfortable? Manageable? Good. So this is the manner our preparation should be there. First, you have to learn the concepts. First, you have to learn the concept and you have to remember the formula and the format. Second, you have to solve the problem. Again, you have to refer the theory part again so that you have the grip over the problem is important for you. Then MCQ revise part. So that now it automatically most of the MCQ can able to answer. Right or not? This process திரும்ப repeat பண்ணி வீட்டுக்கு போய். Okay? Revise பண்ணா automatically you can able to solve the problem also. Write a descriptive question also. MCQ also you can answer. Happy? Good.